Evergrande crisis equals Tether stablecoin meltdown, which equals big market crash, which equals Michael Burry. Hey gang, this is Mike with MrNoFluff.com, and let me give you a quick example, a story that's going to help you illustrate this, the main topic. Back in 2006, fourth quarter, I've been owning my own moving company about 6 years now, 6, 7 years. And what I noticed is that we're moving, we move thousands of people a month. And I noticed that there was a pattern happening. And the pattern was that we were moving a lot of people to these new homes that were worth like 150, 250. However, our customers were moving to these brand new homes, but they didn't have any money to pay for their move to get from point A to point B. And a lot of them were defaulting, and I ended up taking their stuff and then reselling it. Okay, which by under law, in Texas law, we're able to do that. But I was thinking to myself, why is this happening? Why are so many people moving into these gorgeous homes, brand new homes, but they don't even have 300 or 500 or $1,000 to pay for a mover? Guess what? 2006 fourth quarter came, 2007 came, 2008 came, and we realized that these buyers that were buying these homes that were moving, guess what? They didn't have any money. When they bought the house, they didn't have to put any money down. They were doing, no loan verifications. They were doing subprime lending. And that's when I realized in 2006 fourth quarter that I should get into real estate because of my own interior business that flagged me to realize that so many people couldn't pay $1,000 for a move, but they're moving into a $200,000 home or $250,000 home or $300,000 home. Okay. And it helped me realize that the market was going to crash way before anyone else saw it. Now that brings me to Michael Burry, but the way I capitalized on the 2006 was buying houses subject to aka seller financing, where I market to motivated sellers. Now, Michael Burry saw the same thing that I did, but through a different resources. He was studying the statistics of stocks. And what he did was he shorted the market, the real estate market, when everyone thought that the market is going to go up and up and up. Just like me, in 2006 fourth quarter, I knew the real estate market was going to crash because most of my customers, not most, I would say 30% of them couldn't pay their moves and they were buying brand new homes. So I went and bought houses for motivated sellers a year and a half later when the market crashed. Michael Burry got rich by shorting the real estate market when no one thought the market was going to crash. So that's one of the main reasons I even listened to Michael Burry, because me and him have came to the same conclusions on the last major crash. Okay, because there's not a lot of people I listen to on the internet, on YouTube, not because I know it all. No, because I feel like there are people are just saying the same things. Okay, there's a small amount of free thinkers out there. Now, what Michael Burry is saying right now is that, the crisis of one of the largest real estate developers in China is directly tied to the stable coin Tether. Now, let's talk about Tether, okay? Because there's a little backstory you got to understand about Tether. Back in 2016, Tether was having a lot of different beef because when Tether came out, they said that for every dollar that we print, because they're like a private owned company, for every Tether that we print, we have a dollar reserved in the bank. So if they print out 1,000 Tethers, they're supposedly having $1,000 in a U.S. bank or some bank that's equal. So it's a 1-to-1 ratio. Well, in 2016, 2017, a few of the, U.S. states decided to sue Tether, and they want to do an investigation to make sure that they were actually have a 1-to-1 ratio, and that's when we covered that Tether did not have a 1-to-1 ratio like they said in their website, but in reality what they had was maybe a 1-to-1 ratio with commercial real estate, right? With real estate as a collateral that represents the 1-to-1 ratio. So instead of having 100% of the money in the bank, they may have 80% or 50%, who knows? No one knows because they're a private company, in the bank as cash. The remaining is in commercial real estate or just residential real estate paper or notes. Well, what Michael Burry is saying is, which also, let me say this, that I've never been a fan of stable coins. I thought that those were like dog poop of poops, because why would anyone trust it's bad enough we have to trust central bankers to print our money. Why would we trust a corporation to print our money? At any time, that's a centralized, company. At any time they can mismanage, which we're maybe seeing what's going on now. At any time they can print more, anytime they can have to do fractional reserves, and all that bad stuff that goes with central power. Unlike Bitcoin, right, which no one owns it. So, anyways, Tether was caught red-handed. They were lying to the investors. That didn't have one-to-one of Tether equaling the dollar or whatever the basket of currencies they have. They actually had it collateralized to commercial real estate or other assets. Now, what Michael Burry is saying is that, now that you understand what Tether is about, now Michael Burry is saying is that, one of the biggest commercial developers, okay, the reason they were able to get so much money is because of Tether, because no bank would lend them any more money, right? They wouldn't lend them because they knew they were highly leveraged. And the reason they were able to continue, being over leveraged is because Tether was lending them over $20 billion, right? And in return, they were getting what? Commercial real estate assets from the biggest developer in China. Basically, they were just getting the notes. They were just note holders, and they were lending the money out to Evergrande. So now the problem is that the collateral that Tether is claiming to be worth X is not worth X anymore, because commercial and residential real estate in China is in a spiral down. Okay, because one of the biggest developer is having major cash issues, and now they're starting to liquidate, assets, which is going to, have the domino effect to create even more of a problem of properties coming down and down and down. Just today, another big commercial real estate developer or residential real estate developer is now saying that, they're not making their bond payments. So this is now the second developer in China, which is normal, because for example, if you look at 2007, 2008, 2009, when the banks foreclosed on millions of Americans, when they lend them money they should not have, what happened is that the banks got a lot of inventory. And so when they start bringing the inventory on the market, what happened was that home prices dropped, and the average homeowner could not compete with the banks, and which caused more foreclosure. That's why when banks foreclosed back in 2008, 2009, they would hold on to the properties for a while, 6 months, a year, before they put it back on the market, to control the flow of inventory, because they knew if they put too much inventory out there, it's going to hurt them. And the same thing is happening now. When one of the biggest developer of real estate goes under, well, they have to liquidate, right? And that's going to make real estate come down. When you have another developer going under, they have to liquidate, and now it's going to even make more things an avalanche, okay? And then there's going to be all these other businesses that are tied into the real estate in China. For example, property management, home cleaners, construction, so many different things, electricity, inspectors, just all that stuff. They're all going to be tied in. There's businesses that are made a lot of money because they maintain and become, the maintenance of, let's say, the yards of these companies, or the cleaning of the homes before they sell. And some of these owners are made a lot of money, and now they're going to struggle because they're not getting their money, and so they're going to have to liquidate their real estate to pay their workers, and so it's going to be a chain effect. And how is that tying into America? How is that tying into Tether? Is because Tether, they're Michael Burry is claiming, right, that they're holding the bag of the bad asset. And what's in the bag? Well, residential and commercial real estate in China. Okay. Now Tether has come out and says, hey, you know what, guys, we're not exposed to the commercial real estate in China. But again, one has the Fed has ever come out and say, look, we're about to have a recession. One has, a bank ever came out and said, look, we're about to go under. One has a company has ever come out to say, look, we're going under. I mean, like when AIG, when, all these other companies you can imagine just went under the last crash. One day they were doing great. They're on TV saying everything's great. The next day they're belly up, right? So, what is the side effect for Tether? Well, Tether has a market cap, if I'm not mistaken, of like $86 billion. That's why they were able to give, $20 billion to uh, one of the biggest Chinese developers, Evergrande, and the reason is because no other bank wanted to touch that developer in China because they were so highly leveraged, like Bank of America, Wells Fargo. No one were willing to give them any money besides Tether because they're able to print it, write it from their computer, right? And then what Tether did is, they printed this fake money, they got money from investors, and they bought a lot of Bitcoins with it. And some people speculated that the price of Bitcoin shot up the way it did because of all the Tether printing. And again, when Tether goes down, we can see massive losses from Bitcoin to Ethereum to in the crypto market, but also in the stock market. Okay, and that's what Michael Burry is saying. Now, Michael Burry, if you look at his Twitter account, he has deleted his Twitter account, and when he does post something, he deletes it, and also he talks in riddles because he warned people just a couple of months ago that America's gonna have a hard inflation coming, like hyperinflation, and the Fed, the FBI showed up at his doorsteps. All right, so it makes sense that he wants to talk in riddles. He's just warning us. And honestly, I believe this guy because me and him had the same exact conclusion back in 2006, fourth quarter. He did it through his way. I did it through my own business, just being aware that most of my, not most, but 20, 30% of my consumers, customers could not pay for their freaking their moving bill of 500 or 1,000 bucks, but they were moving a $200,000 or $300,000 home or $150,000 home. And I thought, man, there's something got to be wrong. And sure enough, a year and a half later, the real estate meltdown had happened, and you saw hundreds and millions of people in America get foreclosed on. You saw property values come down tumbling, okay? But this time, this crash, Michael Burry and myself, I believe there's going to be even worse than ever before because we have mortgage debts, we have credit card debts, we have car debts, we have companies over leveraged. You think, Evergrande in China is in bad shape? Well, look around here in America, from your commercial real estate investors or your residential real estate investor to your developer to your so many of these businesses out there on the stock market or leveraged out. They're just like dead companies walking. And so, I believe that this guy is probably at the right idea that Tether is in trouble. I never liked stable coins. I've never been a fan of stable coins. I don't know why people would be. I don't know why would anyone would want to own a stable coin when you can own the real freedom. Stable coin is just putting a shirt on that says "gel me up," right? Bitcoin is like, I'm free. You don't own me. I own myself. So I didn't understand it, right? But so who knows? Because all this lending is what's called like shadow lending. It's not done on the books, it's because these are private companies. So they're not going to a Bank of America to getting these loans. So everything could be done through just a handshake and some contracts at an attorney's office or through Zoom or through an office meeting or something like that. I get billions of dollars, and so it's not like it's done publicly. And so there's a lot of debt that Evergrande, however you say their company's name, in China has. It's not even on their books. So things are getting pretty interesting considering more and more developers in China are now not paying their mortgages, okay, or paying their debts, their bonds, their lenders, because, they're over leveraged. And guess what? China learned that from America because America is the most over leveraged than any other place in the world. And so if they're having trouble, guess what we're going to have here. And remember what happened to the Bug 19? They had it first, and then it came across here. Well, ship is burning there. The ship's going to be burning here, guys. Okay. And you know, if I don't listen to other people, but I think Michael Burry's on point. I do think Tether is, you know, for a while it's been a controversy. You know, they seem like they're not. You know, I wouldn't invest my money into them. I don't want to say they're shady, but you know, I don't want to invest my money to them. And you know, a lot of people believe that they don't have a 1-to-1 ratio, and soon, you know, we're going to see if the company's naked. And the side of that is there's, you know, the market cap is $86 billion. So a lot of people are going to be hurting if they have Tether. And even the crypto industry is going to be hurting, and the stock market is going to be hurting because there's so many people that have Tether, hedge funds, and this that have Tether because, you know, they feel like, you know, it's more safer. Now, the other thing is very funny is that Powell talked about that they're not going to ban Bitcoin, but they're going to heavily regulate stablecoin. Maybe the Fed already knows that Tether is going to go under, and that's why they're telling Congress that they need to heavily regulate stable coins. Okay, so maybe they already know, right? Maybe they already know. They're just not saying anything and waiting for the bomb to tick off, guys. Anyways, guys, thanks for clicking the like button. If you're interested in flipping houses and making a lot of money in this crash, then I highly recommend downloading my free book. It's called Start Where You Stand. Go to myrealestatedojo.com, and it teaches you how to buy houses at a deep discount and have the seller become your bank, so you don't have to get a loan from the bank. Again, it's a free book. You can download it at myrealestatedojo.com. If you're interested in working direct with me, sitting down and having a consultation, getting my best-selling courses, getting monthly coaching, then I highly recommend joining the Academy at mrnofluff.com. Again, academy at mrnofluff.com. Should also be below in the description. And if you're looking for the best side hustle you can start with just $100, then I highly encourage you to download the new Flip. There should be a link below where I teach you how to turn $100 into thousands of dollars in a matter of days and weeks, guys. Okay. Thanks for watching, guys. Thanks for clicking the like button. Always remember, you're braver than you believe, stronger than you seem, smarter than you think, and twice as beautiful as you ever imagined. Much love. Peace.